Cathie Woods is dropping some massive bombshells and some facts to Tesla investors, and it's a video of her doing an interview with Andrew, and I'm pretty sure all of you guys saw it, but there were some interesting facts that she spit that I think we all ignored and we missed, as well as some other stuff that she said in another video, which I want to go over with and, just get into the meat of this, because this was a sheesh video and y'all as a long-term investor need to know about it. And if you're a bear, you guys even need to know more about this than bulls. All right, so smash that like button, hit subscribe if you guys haven't already, and let's get down to the video, man. Let's go. So I want you guys to pay attention to what she says. I'll pause the video and we can talk about it and go in deep details about it, because it's pretty juicy information. Let's go.
I do want to start on Tesla.
Sure.
Because we've seen the price action in Tesla, which has fallen on the back of worse than expected numbers. And I'm just so curious what you think is happening at Tesla right now, and whether, and there are some analysts out there that now have gotten bearish or starting to believe that we are at some kind of big inflection point.
Right. So I think a couple of things are going on. First, and Elon's been talking about this in the quarterly calls, the consumer is under pressure. There is, even though these economic statistics are coming out and saying everything's just fine, you listen to these company reports one by one, most of them do not sound like these economic statistics are suggesting. And I think Tesla's been telegraphing the high rates. They've been cutting prices to offset them. And they will continue to cut prices. So I think there's economic weakness.
So the first point, Cathie is saying that a lot of companies in their earnings are coming out and saying a lot of the consumer is under pressure because of high interest rates, high inflation, despite the strong quarterly sales that they have, like for example, Walmart, and the high employment happening. But what they're saying in the quarterly reports, based on what Cathie Wood is saying, is that they see and feel the consumer is under pressure. And she did mention in this lovely chart in a separate video. If you guys want to watch that video, it's a nice breakdown. You guys can check it out here. But she broke it down very nicely here that right now the bottom 33% of income earners are in fact in a recession territory, and the top 33% is on the line, on the border between recession and not, and they're expecting by 2025 or by end of 2024 for things to get a whole lot better. And this is due mainly because of the high interest rates. What they are projecting here in this chart is that by end of 2025, they are seeing that there may be some interest rate cuts. If there isn't, then we could be well below this line here. And if that's the case, that's not going to be good for, high capital purchases. It's not going to be good for homes, and it's not going to be for cars. And we can see that with pretty much all auto companies, auto dealerships struggling to sell vehicles. And obviously Tesla is being affected by that as well. Another chart here that I think is very important for us to understand is, inflation with the money supply. Because the reason we got inflation in the beginning is because we printed a whole lot of money so soon, so fast, at a time where interest rates were zero and everybody was locked in their home while getting stimulus checks. What do you think was going to happen when the world started to open up with all this money supply? People went out and shopped, and you guys can see the big spike right here in 2022 and even early 2023, and that's when they start to cut the money supply, and inflation is tracking down with it. What Cathie Woods is projecting is by end of 2024, we're going to go to negative in money supply, and we could probably see deflation happening. And then by beginning of 2025, when interest rates are low enough, because obviously to go in deflation, to come out of it, we have to reduce the interest rates so we can stimulate growth, slowly comes up. And the printing, when Jerome Powell turns on the printer again, then we can probably see the inflation, going around the 2%, 2.5% around there again. But this was projected. And if that's what's going to be projected, then a few things could happen. One of it is we can see a massive crash, a massive recession happening soon by end of 2024. If this is the case, if we're going to negative money supply. And when that happens, interest rates will not go down gradually, but plummet. But again, this is all just a forecast, and this may or may not happen, but this is what they are projecting. So yeah, consumer index is under pressure. People, when they're going to go buy their groceries and stuff, it's expensive. And right now, it's not a time for them to buy a vehicle or finance one. And we can see it with, companies leasing and financing. It's not moving, right? It's not, no one is, keen to it. Not at the moment. As soon as the interest rate has gone lower, we can see a big spike on that. as well. But however though, for EVs, here's what's going on based on what Cathie Woods is saying.
There has been a bit of a backlash, I would say, and a pause, because you do have GM and Ford saying, wait a minute, we're going to take a pause here ourselves because we can't do this profitably. By the way, that's a positive for Tesla, you know, to have the competition doing this, and Tesla's just going full steam ahead.
For those of you guys that are thinking that Ford and GM is cutting back on EVs is actually very bearish for Tesla, think again. It's very bullish for Tesla. Who right now can scale EVs profitably? Did you say Tesla? You are correct. And if you don't believe me that EVs are the future and growing, well, take a look at this chart. This was updated just a few days ago, and you guys can see 16% increase and is growing year over year. And yes, the blue one is plug-in hybrids, but you can see 70%, and that's from 2018. EVs have been keeping the ratio. Whoever is saying EVs are dying, just show them this chart. That's all they gotta know. That's all. I mean, look at that, 15.8% increase in 2023. Come on, guys. Come on. This is facts. You can't deny the facts. And when you see Ford and GM scaling back on EVs, well, they have the right to, because their EVs are not profitable, they can't scale, and they're losing a whole bunch of money on them. So why keep promoting EVs, even though that's inevitably going to be the full market in the next 5-10 years? I would believe almost all vehicles being sold are going to be electric. But ignore that fact. Right now, GM and Ford, they make their money through gas cars. I don't think many understand how bad of a position Ford and GM are right now, and the fact that they're still long on Ford and GM and all those other gas car companies, it's not gonna be good. And we're gonna dive more into that as we go on with this video, because there's some other juicy data that does support this statement as well. But Ford and GM not producing or scaling back on EVs just gives more demand for Tesla. You'll know why in just a second. Let's continue with the video.
If that is the case, what's going to happen, we believe, during the next 5 years, and you know that's our investment time horizon, we think the cost of an electric vehicle, the average electric vehicle, is going to be cut in half. And Tesla's new block manufacturing techniques and technology, along with AI, are a big part of this.
Did you guys catch that? EV prices will be cut in half. She says the tech and AI is a big part of this. Could she be talking about the Robotaxi, the compact car, the 25,000 car, these two different vehicles? Because she is saying the tech and the AI is a big part of this, so it kind of does sound like it's the Robotaxi. But let's just put that to the side. Let's put it on the back burner. But more importantly, Pejjy, how can EVs be cut in half? Yeah, BYD, they're selling for $10,000, $12,000, $15,000, which, by the way, if they make it to the US, RIP gas cars. But she's talking about here about Tesla. How can Tesla cut their prices in half? Right now, their average selling price is near 50,000, like 43,000. Half of that is about $25,000 vehicle. How can they do that? Well, check this video out and you'll know exactly what she means. And yeah, it is a bombshell.
The Model Y is roughly, $50,000. And if you see that on the chart, that's, roughly 5 to 10% of the addressable market is available at those price points. So the fact that this was the best-selling vehicle in the world and it's operating in such a small part of the overall market shows that consumers want affordable electric vehicles.
The best-selling vehicle was around $50,000. Repeating what he was saying, people want affordable EVs. Why? Because it's cheaper, it's easier, and it's more convenient to operate. Think about it, guys. You never have to go visit for maintenance. You know how every 5,000 vehicles you gotta go for oil change? You don't gotta do that no more. Major services, maybe when you're at 50,000 kilometers. Gas stations, what are those anymore? You just plug in at home. And there's superchargers along the way that you can plug in on the way there if you can't really charge at home. The cost is less. Cost of charging is less. Cost of operating the vehicle is less. And later in the future, this thing will even drive for you if it isn't already. So when you look at it all around, guys, why would you want to operate a gas car when all these things, all these elements, all these positives are EVs? It's just ridiculous. But anyways, we're not done yet. Let's continue.
And so when we see battery costs coming down over the next 2 to 3 years, when we hear that Tesla's on the way to coming out with a low-cost electric vehicle, where then the addressable market jumps up to the 50% plus addressable revenue, that's opening up the market, almost tenfold from where it was. So we think that these short-term delivery numbers, it's almost a throwback to when the Model 3 was ramping. It's missing the forest for the trees in the whole transition to electric.
Missing the forest for the trees. That's facts. Tesla's $25,000 compact car, which is hilariously up for debate, and we will get to that in a minute, has a tenfold increase of deliveries when it comes to market. How? Look at the chart, guys. If the Model Y, which is nearly double the cost of the compact car, is the best-selling vehicle and it only took 5% of the market share of the total addressable market, when the next generation vehicle, which is a $25,000 car, gets released, the total addressable market is at least 50% based on this chart, which is a 10x increase from the Model Y sales. If that's not a sheesh moment, guys, then I don't know what is. I honestly don't know what is. That's crazy. Like the Model Y, $45,000, $50,000 vehicle is the best selling vehicle in the world. When you cut that in half, the total addressable market becomes huge. As the chart said, 50 to 60%, 5% all the way to 50, 60%. That's at least a 10x fold. Nobody's ready for Tesla's next generation vehicle. Like, no one is ready, and now there's rumors going around, thanks to Reuters, that Tesla's $25,000 vehicle is canceled, and they want to focus on Robotaxi, which Elon came out and denied this, and, Franz came and said this.
I would just say stay tuned, don't always believe in what you read.
Exactly. Stay tuned, and don't listen to everything you guys hear online. Now, there could be some truth to this. We don't know what they're lying about, what they are not. One thing is for sure, they are working on a next generation platform, which one will be Robotaxi and the other ones will be compact car. And I do think different other versions will come too. And I think Elon did say there's going to be 3 different versions of this. So let's see what's going to happen next year, nearing the end of 2025, because that's when they said that it could be ready for, producing and all that kind of stuff. So let's see how that's going to be. Moving on with the video.
But it epitomizes 3 technologies. Robotics. These cars are and will be robots.
Facts.
And of course, he's got the whole humanoid robot going as well. Energy storage. Autos in the future will be electric. We believe in 5 years, 75% to 85% of all sales will be electric. Here in the United States and around the world.
Even with the pullback that we've had in terms of EVs and the adoption.
Think about this. Yes, because if we're right on what's going to happen to auto prices, the average EV will be in the $20,000 to $25,000 range.
Did you guys catch that? Mini bombshell, 75 to 85% all autos will be electric in 5 years. Average of them will be 20 to 25,000 on the average range.
Oh, but Pejjy, man, EV demand is dying. Nobody wants an EV. Everybody wants a hybrid now. Everybody wants to go back. They were going back to gas cars, Ford and GM.
Just take a look at this chart again. That's all you need to know. Is it growing year over year? Yes. Is it cheaper to operate than a vehicle? Yes. The only thing we're missing, guys, is, a car being worth 20, 25,000, which the Chinese have. And again, if they come to the US, I just hope Tesla can bring that into market before these guys can enter the US. I really don't want to see Ford and GM, all those guys going bankrupt. I really don't want to see them being replaced by Chinese cars. That's all I gotta say. But anyways, moving forward, get ready, guys, because what she's about to say is the biggest bombshell to date. Complete facts. Check it.
When you have the GMs and the Fords and everybody else saying we can't even make these things profitably to begin with, let alone to do it at half the price.
And just think about this. Tesla's doing it profitably and cutting prices in the process. It's pretty phenomenal.
Mic drop moment. If that is not a mic drop moment, I don't know what is. Sheesh! Legacy automakers are saying no to EVs because they cannot scale and they cannot be profitable. Tesla can scale and they're profitable and they're cutting prices and they're still profitable. That part is insane. It's a sheesh moment, and that's facts. It's absolutely insane. How insane? Check out these facts between BYD and Tesla, because I think BYD is the only other electric vehicle company that's actually making profit. Not much, but they're making some sort of profit. Check it out. BYD, profit per vehicle, almost $1,300. Tesla, over 8,000. Tesla is 6 times more profitable than BYD despite aggressively cutting prices. How do you cut prices by like 35% or nearly close to 50% and you're still 6 times more profitable than the second competition? That's insane. That's a sheesh moment. That's crazy. That's a massive bombshell. And any other bear, Tesla bear out there, if you're a Tesla bull, please send them this clip. I cut out this clip and I put it on X. If you guys aren't following me on X, I don't know what you guys are doing. But I put it there because it's such a bombshell. It's such facts. Please share it with them. Please share that clip with them because that is just mind-blowing. The fact that you cut prices so much and yet you're still profitable, which is insane. Cathie Woods finishes this interview by saying this.
What is it worth in 5 years?
2,000. We're in print on that.
So if right now the stock price is around 170 bucks per share, 180 bucks per share, that's what? A 10, 11, 12 times increase from now, a 10 to 12x from now, which is why I've been dollar cost averaging it every single day, every single week. Hope these prices stay low for a little bit longer so I can just accumulate more flipping shares. But that's the bombshell that she dropped, which was absolutely insane. And the insane part is that we don't care about, as a Tesla long-term investor, I don't care about deliveries. I don't care about the cars. I care about the FSD. That's the reason why I'm going all in Tesla stock, because of the FSD. You get the energy in the bottom, all that kind of stuff. It's absolutely insane. That was a bombshell. Here's another bombshell that Elon Musk has been dropping, which is a sheesh moment. If you guys like this video, you guys will love this video. Check it out, man. It's absolutely insane. Guys, get some merch. I bought the dip t-shirt because this is the dip. If Cathie is saying 2,000 in 5 years, then this is the dip. That's all I'm going to say. Subscribe, and I shall see you guys in the next video. See ya.